Hey everyone, welcome to the weekly review. Last week, kinda got it right with core CPI and yields going down initially. Market failed to go up, but most likely due to the fear of the Iran war. And on Friday, it actually started and it gave us this blow up in oil, which is obviously unpleasant because of the inflation implications, and those are rightfully so. But my take is that this is a fade. First of all, we're already seeing Iran trying to tone things down. This type of offer is very good for them because they're getting their asses whooped. Um, but it's not about this. Israel will likely not stop until the Iran leadership is changed. They would like to go do this until the job is done. But the caveat here is Trump. Because Trump will take the win. He doesn't want oil prices spiking because that will affect the inflation in the US as well. It will affect his administration as well. So I don't think he wants to see that. So if Iran offers a good enough deal, I think he will take it and take that as a win, market it as a win, and so on and so on. So this being said, oil is up around 6% over the weekend. Markets are down like half a percentage point. For oil, it means we are back near the highs, slightly below 6. So we're almost at the highs that we had on Friday. Uh, so there are basically two scenarios. One in which this de-escalates quickly, meaning within the next 2 weeks, and the other one is where it doesn't de-escalate quickly, in which Iran actually goes through with their campaign until the leadership in Iran is changed. That would be the unpleasant one because if oil prices remain elevated for a long period of time, meaning months on end, then it actually gets transmitted into CPI and it's felt in inflation. If it's just a temporary spike of let's say a couple of weeks, it it will not get transferred into CPI. And I think we are in this scenario. I see the escalation happening relatively quickly because that's kind of how it works. Like if the escalation comes, it has to come quickly or else it will not come at all. Um, and looking at other technical stuff, we have Vivix with these two ghost prints that are above current price. A move of 20% up will take them both out, but let's say we get an overshoot to, let's say, 142, so 25% to 30%, maybe 150. Overshoot to 150, we go all the way here. We take both out. We make a classic lower high VIX on the second move after the blow up, like blow up, lower high. This doesn't count because it's a ghost print. We haven't had this move up yet. So blow up, and now we have the lower high. Blow up, lower high. Blow up, lower high, and so on and so on. Blow up, lower high. It's the classic VIX pattern. And we haven't had it yet for, I was looking at the VIX, but we haven't had it for VIX. Uh, Somewhere around 30 for VIX, I think is where we could go at a max if this goes the full length. But this should get faded relatively quickly. It will either be several attempts to take it out and it always gets rejected, or a single attempt that gets rejected massively. And I think this will be reflected in the way equities move as well. For example, we have the 200 MA at 580, so somewhere around here. Not gonna put the exact value, but I'm just putting it here as to not green. Let's do orange as well. So this is 200 MA. And let's say we go something like this over 2 days. We go down like 1.5 in the first day. I think on the second day we could do like -3. But this is intraday. Like the VIX blow up to 30. This will be a blow down in equities. We go down intraday like 3%, but we close above the 200 MA. So intraday full drawdown 3%, but we close somewhere around here at the minimum. We could potentially close even higher. And on a daily, this would look like an attempt to go below the 200 MA, and that makes a hammer candle and we close back above it. So it's a failed attempt to go below the 200 MA and close below it, which is very bullish. It's a hold, and the market will read this as something bullish. Or over 3 days could be something like an even more controlled thing. Like over 2 days, we go exactly to the 200 MA around 580, and on the third day, maybe we do like a gap down here, another 1% down. Come on. So we gap down here, and same as the previous scenario, we close above this, maybe even significantly above. Like this could be anything from, let's say, 2% to like 3-4%. It could be like super bullish would be to close at the yearly open. Like we open below the 200 and we close at the yearly open. That would be super bullish. And if the headline is the war is done for now, that could be easily enough to get us like a 3-4% move up in equities. So this is how I kind of see things here playing out. This is the bullish scenario in which the war de-escalates quickly. And because it escalates quickly, we don't see an impact in inflation from the oil prices. Oil prices would crater back down, maybe potentially make a higher low here. And because of the continued threat of what could come, we go like this, and then we don't make new lows. Like maybe we go back to 60 and we start a bull market over a longer period of time. We do something like this, but again over a longer period of time, not now. And the same is true for yields. The real impulsive move in yields, in my opinion, is the drop here. This is a fake out due to inflation fears, but if the inflation from energy spiking goes away as a fear, I think yields have to come down. And it would confirm a cyclical top in yields if even this spike and fear of war and inflation from energy prices would make a lower high, and after that I think we go to here for 4.25 at for a low retest of this area. After this we could potentially do a move up, but I think before we go higher than the current highs we have to go here to 4.25. So yeah, this is my take. Another reason why I believe this is that we didn't really see um, activity in oil names. Only BP saw some, this is September 43C, but only 4.2% out of the money. Nothing really that shows a belief that the rally will continue and is going to be here for a long time. Like short term, sure, like the bullish activity for next week is good. Same for SOM, but I don't like seeing only this short-term activity. I want to see some longer dated stuff, and the longer dated stuff didn't really impress. USO actually even had puts, like this is July next month, 81 and 71 puts for the highest transacted contracts. It's a bit strange considering uh, people are afraid of the war escalating. But we shall see, and that's kind of it for now. Have a good one. Bye bye.